Hi everyone, this is Paul Cooper with Totes and Notes, and I'm bringing you another Note Nugget in a minute. And on this episode, we're going to discuss fractional reserve banking. Fractional reserve banking is a system in which only a fraction of bank deposits are backed by actual cash on hand and available for withdrawal. Theoretically, this is done to help the economy expand by freeing up capital for lending and keeping things liquid. In practice in the US, this is kind of what it looks like. If Bob had $10 and Bill wanted to borrow $10, then Bob could lend that $10 to Bill because he actually has $10 to lend. Now, if Bob only had $20 and Bill wanted to borrow $100, then Bob would not be able to make that loan because he only has $20 or 1/5 of that loan. Now, with our banks, it's a little bit different. If a bank has $100,000 on deposit, you would think that they could only lend out up to $100,000, and then every single dollar that they had would be lent. Banks are actually allowed to lend more than the money that they have on hand. So a bank may be able to lend up to $2, $4, $5, and sometimes even $10 for every dollar they have on hand. So some of these larger banks, if they had $100,000 in deposits, could lend out $500,000 or even up to $1 million to someone or a group of people that are looking for money. So it allows them to lend more money than they have on hand. Now, in theory, this does increase liquidity quite a bit because now they can lend more money than's actually in circulation in their bank. The problem is if there's a bank run, then now they don't have enough money to pay for all the withdrawals that they need to pay for. So fractional reserve banking is actually a double-edged sword because it can help people keep liquidity going, but at the same time, it's very prone to bank runs and other large downturns. The reason it continues in the US is because our banks are backed by the FDIC and are federally insured to have this money. If they didn't have this money and they didn't have the blessing and the backing from the US government, then they probably wouldn't lend out nearly as much money as they can, and it would be much more conservative. But anyways, that's what fractional reserve banking is. If you have any questions, don't hesitate to reach out.